All right, perfect timing. Awesome panel right before us on the state of the union for Bitcoin. Now we're going to talk about where Bitcoin's headed, and that is on-chain. Let me just get back here a few slides. Okay, nice to meet everyone. My name is Jacob Phillips, co-founder, CEO of Lombard. Lombard is the on-chain Bitcoin company. Today we're going to talk about three things. We're going to talk about kind of the insider's perspective on on-chain Bitcoin. We're going to talk about the three things holding Bitcoin back from coming on-chain, and then we're going to talk about what Lombard's doing to solve that. So real quick background on myself. Co-founder, CEO of Lombard. Before this, I was working on an early crypto derivatives protocol called Perennial. Before that, I was a partner at Polychain Capital on the ventures team. All the time, we were watching this Bitcoin opportunity. I'd seen this both as a builder and as an investor. It wasn't a matter of if, it was a matter of when. And it just so happened in 2024, now was the sort of the time for Bitcoin to really take off. There was an exogenous catalyst to bring Bitcoin on chain, and I think we'll get into this a little bit. So before we get into kind of the insider's perspective, think about the opportunity for on-chain Bitcoin. If you had to make two long-term bets in crypto over the next 5 to 10 years, you had to bet on two things. What would be at the top of that list? Bitcoin continuing to rise in value would be number one, and number two would be all assets and markets are coming on chain. Bitcoin has had the backdrop for Bitcoin couldn't be rosier. Every week, new institutional announcements come out that we would have dreamed of years ago. Last year, at the end of the year, the two biggest naysayers of Bitcoin, I think, J.P. Morgan and Morgan Stanley, come out and report that Bitcoin is being used in the debasement trade. As dollar-denominated assets decline in value, investors are looking for a hedge, and they're finding Bitcoin as one of those assets. And of course, gold doubled in the past 2 years. Now a $35 trillion asset. Bitcoin, the fundamentally better version of this. It would be shocking if Bitcoin doesn't ultimately reach gold parity at the end of the day. And all assets markets come on chain. The data speaks for itself. Look at this: $300 billion in stablecoins on chain, $25 billion in RWAs, launched by BlackRock, Fidelity, Van Eck, Franklin Templeton, some of the biggest players in the institutional space. And this stat always gets people. 2/3 of crypto borrow happens on chain now. No longer is all of crypto finance off chain. So if you believe these two things, that Bitcoin is going to continue to increase in price and markets are moving on chain, I think you believe $1 trillion in Bitcoin is going to move on chain. Hopefully by 2030, maybe that's a bit ambitious. But let's get into the history of Bitcoin DeFi. When people think of Bitcoin on chain, they're in their mind, they're thinking of these things. But at the end of the day, these are just narratives for theoretical demand, not where the actual demand is. Bitcoin L2s, almost no user demand. Nobody wants isolated Bitcoin environments. Builder demand also is not floating that direction. Lightning Network has been in development since I've been in crypto. Some promising things happening there on the payment side. Has kind of had a great 2025, but all the DeFi liquidity is isolated in smart contract platforms, and that's where we would expect DeFi to develop. Ordinals and Runes, early attempts at NFT standards and fungible tokens on Bitcoin, did a lot of great things, I think, in terms of sort of rallying the community around expressivity and DeFi, but probably not the future by any means. And last, BTC staking. I'd have front row seat to this one. A great Bitcoin yield product. However, no chains are willing to pay for security. So unfortunately, that opportunity is not going to scale for institutions. And I thought this as an investor. I know this as a builder from interacting with these teams. The sort of quality of builders in the Bitcoin space is an order of magnitude worse than it is in the ETH and the Solana space, or any of these major ecosystems. I wrote this post about a year ago where I tried to gather up the best on-chain Bitcoin protocols that I could come up with, and now I look back at this. 80% of these guys are gone. They, I don't know, maybe they launched a token and dipped out of there. Maybe they weren't actually committed to the grind of this. It's bringing Bitcoin on chain is hard, and it requires a lot of commitment. And unfortunately, maybe fortunately, DeFi is being built in other ecosystems. So what this really tells me is that Bitcoin as an ecosystem, as a developer ecosystem, isn't going to survive on its own. We need to bridge Bitcoin into new ecosystems. And last, but certainly not least, in 2025, there was a big trend. Every institution was launching stablecoins. Institutions then thought, hey, maybe we can launch a Bitcoin wrapper as well. Most of the big exchanges did this. Many of the big crypto institutions followed suit. And the data is clear. This was a recipe for failure. I think this tells me two things. One is that every major crypto institution is recognizing just how much demand there is potentially for on-chain Bitcoin. And second, I think this tells you just how hard, by looking at the outcomes here, this tells you just how hard it is to break into the on-chain space. And frankly, this is why Lombard exists. Sold to the highest bidder, compromised trust in the product, fired whole business team, absorbed back into parent company. Another rapper approached Lombard about acquiring all their assets. Another rapper went around telling everybody that they were going to bring 10,000 Bitcoin to the chain, now sits at less than 1,000. So very difficult go-to-market, unfamiliar to the one that other institutions may have done in the CeFi space. So a little bit of pessimism there to start this off, but the foundations are incredibly strong. The difference is, it's not the things that have a good narrative that are having success. It's the simple things. Earning with your Bitcoin, borrowing against your Bitcoin, trading Bitcoin, and building on top of Bitcoin. All of these things, well, maybe except for building, are having tremendous success in the on-chain, or excuse me, in the off-chain world, and now we're bringing those on-chain. So we'll start with Bitcoin yield. The way to think about Bitcoin yield is there are tens of billions of dollars in demand that are sitting, knocking on the door of the floodgates, ready to be released as soon as the right product presents itself. So I know this firsthand from when we launched LBTC. 92 days in, we had $1 billion in TVL. This was the fastest that capital has ever flowed on chain to a yield-bearing asset, not just in the Bitcoin space, but in all of DeFi. The other place we see this was when Bitcoin staking popped up, when an institutional-friendly, institutional-familiar form of Bitcoin yield entered the space. Institutions adopted on-chain tech at what I think was the fastest rate we've ever seen it. You saw custodians, exchanges, lots of folks integrating Bitcoin on-chain. When something pops up with Bitcoin, institutions move quick. That's I think the takeaway here. Anecdotally, we've talked to all these folks, exchanges, fintechs, everything down to governments and sovereign wealth funds. Everybody has Bitcoin that's on the sidelines, just waiting for the right time. There's, subject to security and risk assessment. There's some problems with this that we'll get to. On-chain borrowing, maybe the clear sign of product market fit in all of DeFi, and dominated by Bitcoin collateral. If you remove all the looping trades, that is depositing an ETH asset to borrow another ETH asset or stablecoin to stablecoin, on Aave and Morpho, Bitcoin is the dominant collateral. And if you look at something like Maple, an institutionally focused lending protocol, you see that DeFi, Bitcoin again is the #1 collateral. On the left, this chart from Galaxy, an amazing chart. 2019, all borrow lend activity is happening off-chain. A few years later, Q3 2025, 2/3 of crypto borrow is happening on-chain. On-chain is already winning, especially in the borrow lend space. And the chart on the right is part of the reason why. Bitcoiners are used to borrowing at 10 or 11% off-chain. These are like flagship products for some of these groups. You can borrow, stablecoins against your Bitcoin collateral on-chain at about 5%, 50% reduction, plus it's non-custodial, plus it's fully transparent. That's hard to beat. I won't spend a lot of time on Bitcoin trading, but Bitcoin trading is the dominant Bitcoin use case off-chain, and you can bet it's coming on-chain. On-chain spot BTC versus Coinbase spot BTC, almost on par. And the chart on the right, magnificent. This is the aggregate volume of the Magnificent 7 stocks compared to Bitcoin, not too far off. Hyperliquid is a big reason this has happened. Maybe the first on-chain perpetuals exchange and spot exchange to look and feel exactly like a centralized exchange, introduce spot trading, and what do you know? You give people the right user experience and things take off. And I gave this pessimistic view of Bitcoin builders these days. However, what I really want to say about this is not that people don't want to build with Bitcoin. It's just that the sort of way we're framing building with Bitcoin has changed. It's not that DeFi is coming to Bitcoin ecosystems. It's that Bitcoin is coming to DeFi ecosystems. So every single one of the largest DeFi protocols have a Bitcoin strategy that they're executing on, specifically with native Bitcoin. Every institution, every fintech who's building on crypto is thinking about how they can integrate Bitcoin into their flow, specifically on-chain Bitcoin. Best example of this, probably the best product in all of DeFi. Coinbase and Morpho partnered to create a product that allowed users to borrow against Bitcoin collateral directly from their from the Coinbase account. It looked and felt exactly like they were using the exchange. Little did they know on the back end was a decentralized protocol and a tokenized form of Bitcoin. About $15 million in revenue. This is crypto's killer product, certainly Bitcoin DeFi's killer product. And this trend is something we've been watching. I think a lot of people in the on-chain ecosystem have been watching. For years and years, we thought the only users were going to be crypto natives and retail, or at least that was the only addressable market. Now, we see hundreds of billions of dollars in demand coming on chain in the coming years from institutions and fintechs. So the protocols and the infrastructure that we're building on has to change. Now our user base has transformed substantially into being a back end for some of the biggest financial applications in the world. And when we talk to these institutions, we hear three things. By and large, this has been repeated tons of times. Stablecoin yield is my top priority. Bitcoin yield number 2. Bitcoin borrow number 3. Everything else is virtually irrelevant. Stablecoins and Bitcoin are sort of top of everyone's mind. Lots of people building for stablecoins, very few building for Bitcoin. So keep Lombard in mind. The foundations are strong. There's a lot of great things happening in the on-chain space. And yet, look at the progress we've made. 0.6% of Bitcoin is active in the on-chain space, arguably the largest undeveloped market in all of crypto relative to the demand that's there. I've spent a lot of time researching this, both as an investor and a builder, and have distilled it down to 3 reasons for this. The first is security. If you want to participate in on-chain finance, you have to move your Bitcoin out of your favorite custodian or your current custody setup. People have had Bitcoin sitting in these custody setups for years and years and years. Anchorage, BitGo, Coinbase custody, these are the most battle-tested form of custody tech on the planet. If the two worlds are at odds with each other, that is institutional custody and on-chain finance, the big money is not going to come on-chain. So that's one big issue. Second is liquidity. We're all familiar with the concept of institutional grade security, and I think there's another idea of institutional grade liquidity. If the execution capacity for deploying capital and the volatility, or rather stability of rates, is not where it needs to be, then on-chain markets aren't going to be able to compete with centralized exchange. This is really just a bootstrapping problem, number 2, but we'll get into that. And the third is product. DeFi needs to look and feel like a centralized exchange. Hyperliquid did a great job of this. Users want the benefit of DeFi. They don't want the hassle. And the solution, as you might imagine, it's Lombard. I don't think there's a team in the space that's more focused on one narrow opportunity than we are, and that's merging the worlds of on-chain finance and Bitcoin. We have a whole suite of infrastructure designed to solve this exact problem, to be a backend for all of those who want to build on top of on-chain Bitcoin, non-custodial Bitcoin, permissionless Bitcoin. We went 0 to $1 billion in 92 days, the fastest anyone's ever done it in the yield-bearing token space. Onboarded a total of $3 billion in capital. Work with the best on-chain DeFi protocols, all of the best exchanges, and some of the best institutions, hopefully one day all of the best. And since inception, we've had 0 security incidents on-chain. So this is a better look at the Lombard stack. We have tokenized forms of Bitcoin, LBTC, a yield-bearing form of Bitcoin on centralized exchanges, and all major DeFi protocols, the only of its kind there. BTCB, an asset we acquired from the Avalanche Foundation, Avalabs rather, a $400 million asset acquisition, the first of its kind, the only credibly neutral, permissionless, and zero-fee Bitcoin wrapper on the market. This is the best developer primitive for Bitcoin out there. Infrastructure side, we have Bitcoin Connect. This is a developer platform, but it's not a Bitcoin L2. The idea is that users want to, developers want to bring Bitcoin on chain, but they don't want to build an isolated environment. This brings Bitcoin to every chain, any application, wherever you are. The second, we'll get into Bitcoin smart accounts right after this, a huge unlock. And then on the utility side, we have Bitcoin yield products, DeFi marketplace that distributes Bitcoin to a number of different use cases. Lots of area to develop at that layer. So Bitcoin smart accounts, I'm excited to announce this. This is the sort of formal announcement of this product here at DAS. Bitcoin smart accounts enable you to earn yield and borrow against your Bitcoin without transfer of custody. So keep your Bitcoin within a qualified custodian or any custody setup of your choice. Represent that Bitcoin on chain, use that Bitcoin as collateral to borrow stablecoins on something like Morpho or Aave, or deploy that Bitcoin directly into a yield product. User retains title at all times. Assets are always fully isolated, compatible with all qualified, all custodians or all custody setups, whatever it may be, composable across any DeFi protocol. This is the marriage between institutional custody and on-chain finance. You might be familiar with the tri-party agreement or off-exchange settlement. This has been a big trend in the centralized crypto space. You can think of Lombard's Bitcoin smart accounts as replacing the legal docs and human back and forth with verifiable code, making this product infinitely scalable. Lombard spent a lot of time going through the tri-party agreement. It works on a small scale. It doesn't work on a large scale. So this is a big unlock. Second is liquidity. If you think about all the the markets within DeFi that have product market fit, on-chain borrowing, and hyperliquid specifically, both of these on-chain markets were bootstrapped by migrating capital on-chain via yield. Either you might be familiar with the hyperliquid airdrop, that was a big news, or liquidity mining was another big piece of this that helped. Bitcoin's going to be the same way. In order to get the on-chain financial ecosystem of Bitcoin up at full speed, first we have to migrate capital. And I think one thing we've realized is that as much as I would like the on-chain Bitcoin ecosystem to be where it's at today in terms of like pure financial activity, it's not there yet. But off-chain, Bitcoin yield is thriving. There's a lot of great things happening there, plenty of capacity for us to bring on-chain. So a lot of Lombard's focus at this point is bringing institutional off-chain yield on-chain. So working with Bitwise on an RWA vault, working on options vault as well, and soon we're going to announce a credit underwriting strategy, all institutionally familiar strategies that they can now access on-chain. Anyone can access on-chain for that matter. I'll touch on one other thing here, which is LBTC. By far the best Bitcoin yield product that has ever existed, the fastest growing, the largest, the only one integrated within on-chain finance and centralized exchanges, traditionally has been exclusively backed by Bitcoin staking yield. We're going to be switching this up. So the future of Bitcoin yield is going to be off-chain coming on-chain. We're going to, more of this will come out soon, but we're going to switch this back. LBTC was absolutely thriving when yield was, a few percent. When Bitcoin staking yield decreased significantly, there was more to be had there. Using a combination of off-chain and on-chain yield, this is going to get up to become the risk-free rate within DeFi, and that yield-bearing asset I think continues to be a foundational DeFi primitive. And of course, I mentioned Bitwise and the RWA vault. They'll be on stage right after this. Couldn't be more excited to announce, that we're going to be working with them on the Bitcoin yield side. Institutional, thanks, Hunter. Institutional on-chain infrastructure and an institutional asset manager going hand in hand to package, Bitcoin within a qualified custodian represented on-chain and allocated to an institutional asset management strategy. We'll be working with them specifically on the BSA side, but across a number of products in the Lombard suite. Bitwise is best of the best. They've been building the space forever. Launched the most successful ETF of 2025 across any asset class. I think maybe Hunter will correct me if I'm wrong there, but these guys are rock stars, and it's a pleasure to be able to go hand in hand with them to onboard net new capital to the on-chain space. And last thing here is product and UX. If you think about what the ideal product looks like, it's that Coinbase X Morpho DeFi Moloch. FinTech in the front, on-chain in the back. Lombard is fundamentally infrastructure for this. We have, the Lombard SDK, which wraps all of the products together, Bitcoin Smart Accounts, which allows you to keep Bitcoin within a qualified custodian or any custody of your choice and represent on-chain, and BTCB, the best developer primitive in the game, I think. The only one that allows your users to permissionlessly mint, has no fee, and, isn't competing with you, with some other chain or some other ecosystem. So I really think if you want to build this kind of user experience, that is, serve your users Bitcoin, borrow, earn, trade, or payments directly within an application, and you want to use on-chain infrastructure, the only infrastructure right now that's suited for you is Lombard's infra. CAS is one we're really excited about. Crypto card issuer, an emerging neobank, is going to be integrating Bitcoin into their non-custodial wallet entirely backed by Bitcoin. So going to be integrating Bitcoin entirely backed by Lombard infrastructure. So you'll be able to do all of these things ultimately. The user won't even know that crypto is sort of happening on the back end, but they'll see the benefits. So that pretty much wraps us up here. Hopefully this gets you excited. You can find me at jacob@lombard.finance or on Telegram and Twitter at Jacob P. Phillips. And thanks everyone.